$6.3 billion moved on-chain this week, but Bitcoin ended down nearly 4%. That single statistic tells you everything you need to know about what just happened. Massive whale activity, sustained extreme fear, and relentless selling pressure that turned Monday's surge into a 5-day downtrend. This was a week where on-chain volume screamed loudly, but price moved in the wrong direction for bulls. Bitcoin dropped from 66,497 all the way down to 63,861. The Fear and Greed Index spent the entire week in extreme fear territory, averaging 19.5. That's the kind of sentiment you usually see during capitulation events, and the whale behavior tells us they knew exactly what was coming. Monday started with optimism. Bitcoin jumped 3.4% with over 111,000 Bitcoin moving in active trades. Whales were moving big, the momentum felt real, and for about 24 hours it looked like we might be building something. But Tuesday flipped the script instantly. Bitcoin slipped 1.4% as whales suddenly pivoted hard into cold storage. That shift is crucial because it signals conviction. When mega whales move coins off exchanges into self-custody, they're either protecting against a dip or betting on a very long hold. Given the fear conditions that day, it was definitely the latter. Wednesday is where things got interesting in a painful way. Bitcoin slid to 64,220 on extreme fear, and we saw that massive $6.16 billion single transaction hit on Wednesday the 17th, one of the biggest wallet-to-wallet moves of the year. That kind of movement usually happens when a major holder is either consolidating or repositioning before something moves. Thursday proved the week's thesis. Bitcoin dropped 2.3% as whales started actively pushing supply onto exchanges. When you see that pattern, cold storage on Tuesday, then exchange inflow by Thursday, it's classic distribution. They were staging it. Friday and Saturday reinforced the weakness. 7,156 Bitcoin flowed to exchanges on Friday alone as the Fear and Greed Index literally hit extreme, and by Saturday's close at 63,861, the pattern was complete. One crucial detail, net exchange flow for the week was plus 1,463 Bitcoin. That's a net inflow, meaning more coins came to exchange wallets than left them. In a bull market, you see the opposite. In extreme fear, exchange inflows often precede further downside because sellers are staging their exits. Here's what stood out. We had 526 mega whale transactions of 1,000 Bitcoin or more. That's extraordinarily high whale participation. The total whale volume hit 482,000 Bitcoin, which is well above normal weeks. But here's the pattern. They were selling into any bounce, then letting price fall. This wasn't choppy rotation or healthy accumulation. This was deliberate, methodical supply pushing. The biggest anomaly is actually encouraging though. Despite all the selling pressure and extreme fear, we didn't see capitulation level exchange inflows on any single day. The largest flow was 7,000 Bitcoin on Friday, which is material but not panic territory. That tells us institutional holders might be playing defense without full panic, which is different from retail level fear puking. The week's dominant narrative was transition from accumulation to distribution by whale holders, all under a sustained fear environment that didn't quite crack into pure panic. Watch next week for whether those exchange balances actually move out as sells or if we're at a local bottom. If whales start pulling coins back off exchanges, that's your signal fear is priced in. The Fear and Greed Index hitting 19.5 is historically extreme, and historically, Bitcoin doesn't stay there long. Daily briefs go live every day at 9 p.m. UTC on SwissWhaleIntelligence.com. Subscribe and turn on notifications so you don't miss tomorrow's update.